Welcome to this explainer. Look, today we are going to break down exactly how to take a single, crisp $100 bill and turn it into real, long-term wealth. We're not doing any get-rich-quick schemes, no complex finance jargon, just a brilliantly simple, mathematically proven strategy. Building wealth doesn't require a background in finance or some crazy insider secret. It just requires a solid mental model that literally anyone can adopt. We are going to completely bypass the noise, ignore the gimmicks, and focus entirely on a robust framework for building your financial future from the ground up.
Seriously, think about it. What if I handed you $100 right now, today, but with one massive catch? You have to use it to build permanent wealth from absolute zero as we head into 2026. You're probably thinking, $100? That's nothing. But that is exactly the point. It's not just money, it is a starting line. It's a profound shift in your mindset from being purely a consumer to becoming an actual owner. So, if I had to start completely from scratch today with just that $100 bill, what we're about to cover is the exact step-by-step playbook I'd use.
Okay, here is our game plan for today. We're going to cover a 5-step roadmap. The biggest investing mistake, step 1, which is getting started, where to put your money, the secret to wealth, and finally, the mistakes you must avoid.
Let's kick things off with section 1. The biggest investing mistake and the absolute danger of waiting.
You know, there is this incredibly damaging myth out there keeping millions of potential investors totally paralyzed on the sidelines. It's this idea that you need a massive mountain of cash, thousands and thousands of dollars just to enter the arena. But honestly, starting from absolute zero or with very little money isn't an actual roadblock. It's really just a psychological barrier. Having limited funds to start is completely normal. The absolute biggest mistake you can make isn't starting with too little cash. The catastrophic mistake is waiting around until you magically feel like you have enough to begin.
And here is exactly why waiting is so toxic for your wallet. Inflation. Simply put, inflation is the process that quietly but ruthlessly reduces what your money can actually buy every single year you wait. I mean, just think about what $100 got you at the grocery store a decade ago compared to today. The difference is staggering, right? So when your money is just sitting idle in a checking account, it isn't actually standing still. It's actively moving backward. Inflation acts like this silent, invisible tax on your uninvested savings. Because of this, time is actually your single biggest advantage in investing, and deciding to wait around is just a guaranteed mathematical loss.
Which brings us to section 2, step 1, getting started and laying the foundation.
Since we know that time is actively working against our uninvested cash, we've got to make practical moves immediately. The literal first step is just opening a trusted brokerage account. But as you're setting that up, you really need to internalize this. Investing is a marathon, it is not a sprint. A lot of beginners jump in and treat the market like this frantic race, obsessing over daily charts, stressing about minor price dips, and feeling like they need to buy and sell every afternoon to make progress. Look, that day trading anxiety is the exact opposite of wealth building. The true goal is the peace of mind that comes from being a long-term owner of exceptional businesses. You are planting a seed today so you can sit in the shade decades from now.
Moving right along to section 3, where to put your money. This is the $100 strategy.
So this answers the core question everyone faces once their account is finally approved and funded. The friction of getting set up is over, but now you've got choice paralysis. What exactly should you buy with that very first $100 deposit? Well, the answer is an incredibly simple, actionable plan that cuts right through all the noise. Step 1, like we mentioned, is having that trusted brokerage account open and ready. Step 2, just buy a low-cost S&P 500 index fund or ETF. You absolutely don't need a complex portfolio of 40 different assets to start out. It really is that straightforward, and it totally eliminates the overwhelming pressure of trying to pick the perfect winner.
Now, you might be wondering, why shouldn't I just buy that really cool, trendy company everyone is talking about? Because buying one random stock carries extraordinarily high risk. If you do that, you're betting your entire $100 on one single company's success or failure. You're basically searching for a needle in a massive haystack. An S&P 500 index fund dramatically reduces that risk, because instead of trying to find the needle, you literally just buy the entire haystack. That one single investment gives you immediate, broad exposure to hundreds of America's most dominant companies all at once. You're effectively placing a long-term bet on the continued growth of the broader American economy rather than gambling on the fate of one CEO or one product line.
All right, let's dive into section 4, the secret to wealth, and uncovering the real power of your first investment.
So here is a crucial realization about that initial $100 deposit that most people completely miss. It is not about the size, it is entirely about the habit. Beginners often look at $100 and think the potential returns are just too small to matter. But honestly, the size of that initial deposit is totally irrelevant. It's important solely because it creates the behavioral habit of investing. Just imagine the sheer financial velocity of investing $100 every single month for, say, 30 years. Through the staggering power of compound growth, where your interest basically earns its own interest, those relatively small habitual contributions snowball into these remarkably large, life-changing sums. The habit itself is the actual engine of wealth.
It all comes down to this. Consistency beats perfection. Building that muscle memory of investing regularly is exponentially more powerful than trying to perfectly time the market. People love to wait on the sidelines for the perfect dip or the perfect economic conditions before they put their money in. But historical data shows that missing just a handful of the market's absolute best-performing days over a decade can completely wreck your overall returns. You literally can't predict when those massive growth days will happen, which means you simply have to be in the market consistently. Do not worry about finding the absolute perfect moment, just focus entirely on being relentlessly consistent.
Okay, our final section. Number 5, mistakes you must avoid to protect your wealth. Even if you have the best strategy in the world, there are these common behavioral pitfalls that constantly trap new investors. Let's rapid fire through these. First, never, ever invest money you're going to need to pay rent or buy groceries next month. If the market dips and you're forced to sell immediately to cover bills, you just locked in a completely unnecessary loss. Your investments require time to mature. Second, do not panic when the market drops. Corrections are a normal, totally healthy part of the economic cycle, not a signal to abandon ship. Third, avoid the temptation to chase viral stocks driven by FOMO or the fear of missing out. And finally, never risk your capital based purely on social media hype. Successful investors aggressively tune out the noise, ignore the daily hysteria, and keep their eyes locked firmly on the horizon.
To bring this whole thing full circle, remember our earlier discussion on the silent tax of inflation? Time is the one single variable in investing that you can never get back once it's gone. There is a classic proverb that hits the nail on the head. The best time to start investing was years ago. The second best time is today. If I were starting completely over in 2026, I would invest my very first $100 right this second instead of waiting around for the stars to align. The math proves it for sure. Time in the market is your greatest asset.
So I want to leave you with this final provocative thought to chew on. If you were handed $100 today, right this very minute, what would you invest in first? Think deeply about how you will actively apply the foundational strategy we covered in this explainer. The clock on your financial future is already ticking. So, what is your next move?